Hello and welcome to Livewire's C-Suite coverage. My name is Stephanie Gardner. Today, I'm sitting down with Adam Watson, CEO of APA Group. Adam has been the CEO since 2022 and prior to this was the CFO, so there is no one better suited to discuss the company's latest results. Adam, thank you for sitting down with Livewire today.
Morning, Steph.
Good morning. So let's get straight into it. I saw the results yesterday. To me, they look pretty good. Congrats.
Thank you.
So let's talk about that and get into the numbers. What are the key highlights from the results? What should investors be focusing on?
So importantly, revenue was up, earnings were up, statutory profit was up, free cash flow was up, margins were up, distributions were higher. So all of those key metrics were going in the right direction. The key numbers that we're really proud of, underlying EBITDA was up 7.6%, really just holds true to the strength of our business and the underlying earnings that we generate period on period for our security holders. So very pleased with that. The other one I'd like to call out is the margins. The EBITDA margins were up by 280 basis points. And 280 basis points is obviously a big number, and that's been driven by not only the strength of the underlying business, but we've taken a lot of cost out of the business as well and trying to drive a much leaner, much more simplified business.
So what do you think these results tell us about the quality and sustainability of performance?
So our business is basically providing energy infrastructure solutions for customers who are looking for long-term supply arrangements, and reliability of supply is critical to them. So the way that we structure our business and our strategy is to work with customers to enter into long-term contracts with inflation-linked revenues, and we're a really stable business. Where we get our growth, that 7.6, comes from adding additional assets online. And if we take this period, we had 3 big assets come online, which have all performed really, really well. The Kurri lateral pipeline, the Atlas to Reedy Creek pipeline, and we also had the Port Hedland solar and batteries. So if we can add new assets to the fleet, in addition to the underlying inflation-linked revenues, we're consistently getting good returns.
So there are a couple of key numbers that I'd like to get into a little bit more. The first one, EBITDA margins expanded to 77.3%, which you've touched on a little bit already. Is this sustainable?
Strong result there, and what we've been very focused on is trying to simplify the business, as I mentioned. We did divest some non-core assets during the period, and that's been very successful for us, and we've handed that over to the acquirer very successfully. But that's enabled us to get into the business and look at how we can streamline operations and how we can ensure that the margins that you're seeing are sustainable. Reduced the cost base a lot, but principally with the external spend. And we're doing a lot of work using AI and other technologies, for instance, in the way that we maintain our assets, so that we're getting better at how we not only operate the assets, but maintain the assets and schedule those. So we're very confident it's sustainable, and the ambition is to keep that cost base lean and efficient and constantly grow the business from a revenue perspective with the new assets that I spoke of before.
Adam, talk to me about the $3 billion pipeline. It's a big number. How does that compare historically? And what are some of the key projects that contribute to it?
It is a number that's growing, and we're really proud of that. And some would say it should be too, because when you look at the opportunities in our sector, in the energy market, there is an abundance of opportunities. Our core business is in 2 areas. One is gas transportation and storage. And the big project there is the East Coast Gas Grid expansion plan. We'll come to that no doubt in a moment. And then on the power generation side, we're looking at solar, wind, batteries and gas-fired power generation to support the removal of coal from our energy markets, or diesel if you're up in the remote regions, and supplementing that now or replacing that now with, again, solar, wind, batteries. So it's growing, some really big projects in there. The power generation project to note is in Queensland for CS Energy, a government-owned corporation, where we're providing them with a gas-fired power generator to enable them to remove coal from their fleet. So it's very positive. We're really proud of where we're at.
Seems like there's a lot going on right now.
There is a lot going on.
Pretty busy.
There is a lot going on.
So let's move on to milestones now. What key milestones did the business achieve over the period?
The biggest one that we announced yesterday was the expansion of our East Coast Gas Grid.
It's quite a mouthful.
And it is a mouthful, and it's a big project. And we've broken that down into 2 stages. Stage 3A, which is more compression into our network. And that's a really efficient utilisation of capital, not only for APA and our investors, but also for the customer. We've reached financial investment decision on that, so we've hit the go button on that, and that will address the winter gas shortfalls for the southern market by winter 2028. So a really big tick for consumers and for industry right across the East Coast. The second part of that is stage 3B. So we're building a new pipeline, effectively going from Queensland and down into New South Wales. But the point there is for that to be able to bring gas from the northern supply basins down to the southern demand centres. We have ordered all of the early equipment that's required, the pipeline type products, pipes and compressors and so forth to get that going. We haven't reached FID on that, and the principal reason is that we're just waiting for the National Gas Review to be completed later in this year. We feel really confident about how that will play out because the government's draft has been very positive about the role of natural gas and domestic gas in Australia, but we just feel it's prudent to wait until the outcomes of that are complete before we hit go on that one.
So building on that, you may have already answered this a little bit, but how do those milestones projects, how do they enhance or reinforce your competitive advantage?
So for us, it's really about making sure that our customers can have the supply of gas where they need it. And you need to remember that in Australia, a big proportion of the gas that's consumed, in fact, the majority of the gas that's consumed in Australia is industrial users. Think of steel mills, think of ammonia plants, think of brick manufacturers, glass manufacturers. So they're always trying to find solutions to get the lowest cost gas. And the way that we try to support them is by incrementally addressing bottlenecks in the transmission system and try and match demand and supply. So a new gas field is developed, there's a new supply arrangement in place, but they need to be able to get the transport solution in there to be able to get it to the end user. So we're constantly finding ways to de-bottleneck, and it's a very efficient way to deploy capital as well.
So looking forward now, what do you see are the biggest growth opportunities, and what targets should investors be keeping a close eye on?
So I'd start by saying the underlying business is really strong, and the inflation-linked revenues just gives us that periodic increase in earnings year on year, which is really positive. But like all infrastructure assets, you want to continue to deploy capital and generate returns above your cost of capital and continue to pay a nice healthy distribution as well. The pipeline for us is really in those two markets that I spoke of before. One is gas transmission and storage, and not only do we see opportunities continuing to expand that East Coast gas grid into the future, but we're also looking at new developments such as the Beetaloo in the Northern Territory, the Surat and Bowen Basins and the Taroom Trough in Queensland. So these new gas fields that need to be able to get their gas to market. So a lot of opportunities there. And then when you go to the gas-powered generation site, or just power generation generally, solar and wind, we see an enormous amount of opportunity on the East Coast and in the West Coast as well. Because again, you've got coal-fired generators that are shutting down eventually, and we need to upgrade our fleet. The one that people get quite excited about, which I guess is the next horizon as well that we're looking at, is data centres consume an enormous amount of
Big
energy.
topic right now.
And quite frankly, there's just not enough power available on the grid. So the data centres, for example, in the US and elsewhere in the world are starting to look for what they call behind the meter solutions, so not connected into the electricity system. And we do that work in the mining regions. So can we create behind the meter solutions to be able to power data centres? Could be a really interesting one to watch.
Just on that, behind the meter solutions, what could that look like?
So think of a region, and it could be in the city as well, but think of a solution where you've got an industrial park where we could build a gas-fired power generator, a solar farm, a battery, and be able to have that data centre operate on that piece of land. It'd be a reasonably large piece of land, obviously, but enable that data centre to be able to operate 24/7 without actually drawing the energy from the electricity grid that we all currently source our energy from. And one of the reasons for that is one is just there's not enough supply available, and two, we're all very conscious about making sure that the data centre demand for energy doesn't increase costs for consumers. So one practical solution is have that isolated for the data centre to have their own energy solution behind the meter, behind the grid.
It's really interesting. Learned something new. So looking ahead, what areas of the business would you most like to improve moving forward?
Our focus over the next 12 months is twofold. One is we want to continue to execute our cost out program. So we're trying to continue to execute those to hit our $50 million target that we announced earlier in the year for FY26, and we've made really strong progress. So we've spoken about that a lot internally, and we just want to keep going to improve our margins in that regard. And the second one is the execution of these growth projects. So infrastructure is always hard. It's easy to dream it up on a spreadsheet or on a piece of paper, but you're having to work with landholders, with your customers, with government, and we need to bring some of these projects to life. So we're very much focused on that.
Great, that's all very interesting. Thank you, Adam, for sitting down with us today.
Appreciate it. Thanks, Steph.
If you enjoyed that C-Suite interview, make sure to give it a like and subscribe to our YouTube channel. We release new content every week.